Have you ever wondered why Bitcoin's value seems to skyrocket every few years? Today, diving deep into the world of digital currency, specifically Bitcoin. Now, Bitcoin is not your average currency. It's digital, it's decentralized, and it's got a limited supply. That's right, unlike the and euros of the world, there won't be an infinite number of Bitcoins. But here's where things get really interesting. Bitcoin has a unique feature known as halving. It's a process that not only sets Bitcoin apart from traditional currencies, but also plays a significant role in its volatile price movements. So what is this halving? And why does it cause such a stir in the cryptocurrency world? Well, hold on to your digital wallets because we're about to take a deep dive into this fascinating aspect of Bitcoin. In the next few minutes, you will learn what Bitcoin halving is and why it's essential to the cryptocurrency world. But let me tell you, Bitcoin halving is so close and it's going to be a thrilling event. To grasp the concept of Bitcoin halving, we must first understand how new Bitcoins come into existence. Picture this. In a decentralized network like Bitcoin, transactions are verified by a group of people known as miners. This process of verifying transactions and adding them to the blockchain is what we call mining, but miners don't do this for free. They're rewarded with new Bitcoins, which brings us to the concept of Bitcoin creation. You see, Bitcoin was designed with a finite supply of 21 million coins. These coins are gradually introduced into the system by rewarding miners for their efforts. But here's the catch. Every 4 years or so, or after every 210,000 blocks have been mined, the reward for mining is cut in half. This event is what we refer to as Bitcoin halving. So let's say miners were initially rewarded with 50 Bitcoins for each block mined. After the first halving, the reward fell to 25 Bitcoins, and then to 12.5 after the second halving. This process continues, effectively cutting the reward in half every 4 years, until all 21 million Bitcoins are in circulation. Now you might be wondering why this halving happens. Well, it's all part of Bitcoin's deflationary design. It's a way to control inflation and preserve the value of the currency. As the reward for mining decreases, the rate at which new Bitcoins are created slows down. This scarcity is what makes Bitcoin valuable. But what does this mean for miners? Well, as the reward decreases, competition increases. It becomes harder and more expensive to mine Bitcoins, which could discourage some miners. But on the flip side, if the value of Bitcoin increases due to its scarcity, the reduced rewards could still be worth the effort. Bitcoin halving is like a digital gold rush, but instead of gold, miners are after digital coins. Now that we know what Bitcoin halving is, how does it affect the price of Bitcoin? The answer lies in the basic principles of economics, supply and demand. Bitcoin halving events directly impact the supply of new Bitcoins entering the market. Every 4 years, the reward for mining Bitcoin is cut in half, thus reducing the rate at which new Bitcoins are created. This decrease in supply can have significant implications on the price of Bitcoin. Let's think about it like this. Imagine you're a miner and your job is to unearth gold. Suddenly, the amount of gold you can mine is cut in half. There's less gold available, which makes it more valuable, right? The same principle applies to Bitcoin. When the supply of new Bitcoins decreases, each existing Bitcoin becomes more valuable, especially if demand remains strong or even increases. You see, Bitcoin has a cap. There will only ever be 21 million Bitcoins in existence, and over 18.5 million have already been mined. So as we get closer and closer to reaching that cap, and as the reward for mining decreases, the scarcity of Bitcoin increases. Now let's talk about demand. Demand for Bitcoin can increase for a variety of reasons, such as growing acceptance of crypto as a legitimate form of payment, increased interest from institutional investors, or economic instability leading people to seek alternative forms of currency. When demand increases and supply decreases, the price often goes up. Historically, Bitcoin halving events have been followed by significant price increases. For example, after the second halving in 2016, Bitcoin's price soared to nearly 20 times its pre-halving price within a year and a half. But remember, while history often rhymes, it doesn't always repeat, and many factors can influence Bitcoin's price. So in essence, Bitcoin halving can be a catalyst for a bull run in the crypto market. But, as with all investments, it's essential to do your research and understand the risks before jumping in. One might wonder, can we predict the future price of Bitcoin based on its halving events? It's a tantalizing question. After all, who wouldn't want to peer into the future and see the potential fortunes that await? However, as with many aspects of life, the future of Bitcoin is not so easily discerned. Over the years, there's been a lot of speculation around Bitcoin's price, especially in relation to its halving events. Historically speaking, these halving events have often been followed by substantial price surges. For instance, the first Bitcoin halving in November 2012 saw the price jump from approximately $12 to over $100 within a year. Similarly, the second halving in July 2016 led to a dramatic rise from around $600 to nearly $20,000 by December 2017. But before you start counting your digital riches, it's important to remember that correlation does not imply causation. Yes, Bitcoin's price has surged after previous halvings, but numerous other factors can and do influence its price. Market demand, technological advancements, regulatory changes, and broader economic trends all play a role in determining Bitcoin's value. Moreover, the cryptocurrency market has matured significantly since the early days of Bitcoin. Institutional investors now play a significant role in the market, and their investment strategies are often more sophisticated and less predictable than those of individual investors. So, while Bitcoin's halving is indeed a significant event, it's not a crystal ball that can predict future prices. It's just one piece of the complex crypto puzzle. Remember, investing in Bitcoin, like any investment, comes with risks. It's important to do your own research, understand the market, and if possible, consult with a financial advisor. While Bitcoin halving is a significant event, it's just one piece of the complex crypto puzzle. So, we've learned a lot about Bitcoin halving and its potential impact on price. But what does this mean for you? In the grand scheme of things, it's about understanding the fascinating world of cryptocurrency and how market mechanisms like Bitcoin halving play a role in shaping its value. Let's take a moment to recap what we've explored. We began by introducing Bitcoin halving, a built-in feature of the Bitcoin network that happens approximately every 4 years. It's a process where the reward for mining new blocks is halved, hence the term Bitcoin halving. This mechanism serves a dual purpose. It controls inflation by reducing the number of new Bitcoins generated and circulating, and it ensures that Bitcoin will continue to be mined well into the 22nd century. Then, we delved into how this halving impacts Bitcoin's price. The basic principle of supply and demand tells us that if supply decreases and demand remains the same, the price should increase. And that's exactly what has happened historically after each halving event. However, remember that while this pattern has occurred in the past, it's not a guarantee for the future. We also discussed the speculative nature of Bitcoin price predictions. While some believe that halving will lead to higher prices due to the reduced supply, others argue that the halving events are already priced in, meaning that the effects of halving are anticipated by the market and factored into the price before the halving even occurs. As with all investments, predictions should be taken with a grain of salt. What's crucial is that you continue to learn and stay informed about the ever-evolving world of cryptocurrency. This is a young and dynamic field, and as such, it's prone to rapid changes and developments. Knowledge, they say, is power. And in the world of cryptocurrency, it's your best tool for navigating the market. Now, here's something to consider. If you're feeling adventurous and want to dip your toes into the Bitcoin pool, why not try buying a small amount? You don't have to commit a significant portion of your savings. Think of it as a learning experience, a way to familiarize yourself with how the system works. And who knows, you might just find that you love the thrill of the crypto world. Before we wrap up, let's reiterate an important point. Cryptocurrency investment, like all forms of investment, comes with its own set of risks. It's crucial to do your homework, stay informed, and make wise decisions based on your financial situation and risk tolerance. Remember, cryptocurrency investment comes with risks, so always do your homework and invest wisely. And if you're feeling adventurous, why not try buying a small amount of Bitcoin? You might just love it.